meme coins reach all-time highs, and we evaluate whether they will continue to rise. Joe Biden and Donald Trump are positioning themselves in favor of crypto development, and Bitcoin and Ethereum debut today on the London Stock Exchange. It seems that Pepe's meme coin has surpassed and dethroned the previous leader in this field, SHIBA INU. Now, the event where we see Pepe reaching an all-time high is occupying all the headlines. And when we see that not only Pepe is hitting an all-time high, but we are also seeing other meme coins exploding upwards, making all-time highs like MOG, Wojak, Ponke, and while it's not an all-time high, Peng is also experiencing a strong revaluation. How many times have we seen in the crypto ecosystem, especially with meme coins like SHIBA INU or Dogecoin, that their habitat is to stay dormant without much prominence until a big FOMO is generated. They explode only to return to where they belong, and the next day they explode again to return to where they belong. And this is a dynamic that repeats itself over and over again. And when they grow very fiercely, we often see a correction where it seeks a continuation, a replica, which is usually larger than the previous impulse. We already experienced this when SHIBA INU reached its all-time high, and we covered it in Crypto Insight. What message do I want to convey regarding the concept that everyone is seeing how meme coins are making all-time highs? Of course, those who haven't bought at the last moment feel foolish, and this is when we start thinking that we need to monitor meme coins to consider a short position, because here you have to ask yourself a simple question. Does anyone think that Pepe, a meme coin whose foundation is null, just like SHIBA INU's foundation, which at one point had wild fanatical support, and I dare say an unconscious frenzy over the SHIBA INU ecosystem, where SHIBA INU invented a product, and people rushed to applaud it, and that product was really anything? Well, under this idea, where Pepe is really nothing, it is absolutely nothing. Does anyone think it makes sense for the future of its asset to continually grow like the S&P 500, for example? If even cryptocurrencies like Bitcoin or Ethereum show that they suffer from great volatility and can fall up to 80%, do you believe that Pepe will outperform Bitcoin? Well, I think the answer is already clear. It is quite evident. It is then that we are going to monitor all these meme coins or shitcoins to assess how to incorporate them into a short position. Here, be careful. We are in a moment of great bullish fury, and frankly, we don't know how much longer it will continue to rise, as meme coins are currently totally bullish. So what's the prudent move? Well, now with Pepe, we're tracking a wedge. However, I'm not going to wait for a breakout to believe it's going to fall to hell. Rather, I have it drawn as a way to keep track. What am I really looking for? A trend line? A structure? Something more macro? Let's see if at some point it decides to work with it, and in the future it can give us more information to start shorting Pepe. But as I said, we don't know if this will keep rising. Well, let it do what it wants, but the moment it allows us to draw some kind of structure, that's when we will be attentive to assess those short entries. I think the message is quite clear. We shouldn't go against the bullish trend. One would be crazy to do so, but the message is that we will keep an eye on these meme coins, knowing their nature, and we will consider short entries as soon as they confirm it, because honestly, I don't believe these assets will continue to rise naturally. Regarding the motivation of investors to get into these types of assets, it is exclusively based on FOMO. You've even seen what happened with SHIBA INU, which had a large community behind it. They thought that just because there was a large community, it would push it infinitely, and you only have to see what happened with that asset. Neither communities nor anything. So imagine these meme coins that no one knows, or better said, that are not important because they are known, but the investor has a purely speculative fixation driven by FOMO because they want to be part of these attractive returns. That same profile of investor is not a long-term holder. They are not JP Morgan or Morgan Stanley injecting millions in purchases expecting their valuation to increase in a meme coin over 10 years. Do you understand what I mean? I think it's logical to consider shorts and bet on the failure of this FOMO. And here I'm showing you on screen some cryptocurrencies that are in the eye of the storm, and as at some point it was logical to think that the asset would return to where it belongs, here it's the same, here it's the same, and here it's the same. And now we are in a new and very aggressive phase. Well, the return will be very aggressive. We don't know when it will happen, but with some certainty we know it will happen. The question is, how high will they go? And here the strategy is, how do we sell it? Unlike what the press tells us, injecting FOMO because they make headlines about meme coins appreciating a lot. This induces investors to want to buy. Then there are YouTube channels, and sorry for the SHIBA INU fans, but back then I remember there were even many pro-SHIBA INU channels specializing in SHIBA INU, something completely absurd, but that existed. And here we have, for example, the Peng asset, something like a penguin, and well, let them rise as much as they want. We don't know how far, no idea, but once it starts to pull back, we will look for structures to try to incorporate ourselves into those shorts. And that's what I was saying. We have written press injecting a lot of FOMO into meme coins. I'm sure, honestly, I haven't seen it, but I sense that's the case. Now, there will be many YouTube channels analyzing Pepe coin, talking about people making money, probably inducing purchases. In a very clear way, the winning strategy will tend to seek short positions when the opportunity presents itself. And enough enough of meme coins, because now we are going to reflect on how Joe Biden, the current president of the United States, and Donald Trump, the candidate who wants to run for the presidency in the upcoming November elections. We are seeing how both sides are showing themselves to be strongly pro-cryptocurrencies. But here we will assess the following, and seeing recent events, we will remember how Joe Biden not too long ago intended to halt Congress with the SAP 121 law. Remember that the SAP 121 law, Congress had managed to repeal it, and this law required us banks to include in their balance sheet the cryptocurrency holdings of their clients. And this evidently does not interest the banks in the slightest due to the fluctuation and volatility of the crypto ecosystem. And as I was saying, Congress had already accepted the vote to repeal this law so that banks feel freer to work with cryptocurrencies, and we saw how Joe Biden told Congress, friends, that's not going to happen. He opposed the approval and did everything possible to keep SAP 121 in effect, thus hindering crypto progress. But then we see how the 0M spot ETF, in a somewhat hasty and anomalous manner, has been approved by Gary Gensler following the quickest possible path to apply for the ETF's approval. This can be understood as Joe Biden, on one hand, naturally showing himself as anti-crypto, as throughout his term, he has allowed the US not to be a crypto-friendly space, demonstrated by the SAP 121 law situation I just explained. But then, for some reason, the Ethereum ETF gets approved very quickly, with Gary Gensler taking any possible shortcut to make it so. And all of this leads us to think that the US elections are just around the corner, and that these maneuvers could be simple propaganda by Joe Biden to convince cryptocurrency supporters. It shouldn't surprise us that after the approval of the Ethereum spot ETF, Donald Trump issued a statement absolutely pro-cryptocurrencies. He implied that if he were president, the legislation and situation for cryptocurrencies would be very friendly in the United States. We should also remember how Donald Trump accepted donations for his political campaign in cryptocurrencies. In the end, what we are seeing is a pure propaganda dance by Joe Biden and Donald Trump, both showing pro-crypto stances out of self-interest. Therefore, in our opinion, until proven otherwise, all these headlines point to pure speculation, to pure smoke. Something that is very real is that this Tuesday, May 28th, Bitcoin and Ethereum ETNs, also known as exchange-traded notes, are debuting on the London Stock Exchange. The issuers who obtained approval from the FCA, which is like the SEC in England, were asset manager WisdomTree Investments and the Swiss firm 21 Shares. When the ETNs, which are exchange-traded products, start trading, they will only be available to professional investors. Remember that the FCA has banned the sale of Bitcoin and other cryptocurrency derivatives to retail consumers. In the end, we must see these types of events as very positive, since institutional investors increasingly have more access to regulated investment in cryptocurrencies. Of course, they are synthetic products, but what the creators of these synthetic products have to do is hold the underlying asset. Therefore, institutional investment strength is being given to the crypto ecosystem. And this, of course, should be embraced. And now, let's update the crypto technical analysis. Let's briefly look at what the S&P 500 is doing. Well, let's remember that we are in a macro bullish channel, and that we are at its high end, where we have identified a wedge, which is a Z pattern, that has broken through the wedge. And now, under the hypothesis that a Z pattern is unpredictable and can rise as much as it wants, we will then be positive with that idea, keeping in mind that if tomorrow, something we don't know, key structures are broken, we will then begin to be openly bearish in the traditional market. Let's also see what Nasdaq is telling us, which is also in a macro bullish channel. We are at its high end, also in a bullish wedge, which is a Z pattern, and that Z pattern will continue to rise as much as it wants until proven otherwise. In other words, we are monitoring this structure because this Z pattern might attempt to break the trend line of the Z to then become much deeper, forming a much larger wedge. The way to keep track is to say, hey, let's stay positive since we are in a Z pattern and we don't know when it will end, but we have already analyzed what we want to see to consider the rise finished. In Nasdaq, in other words, if this wedge decides to break, we should wait for the trend line to break, which would invite us to think of a bearish path for the traditional ecosystem. But as long as we don't see the drawing I made for you, hey, it can rise as much as it wants. It's similar to how we want to track meme coins. We don't have a crystal ball and we don't know when hypothetically it could turn down. Similarly, we've been analyzing oil because if we see a hypothetical bearish traditional market, we should see a bullish oil market. And remember that this Saturday is the OPEC meeting, where they will decide if they are interested in raising the price of oil. And keep in mind that OPEC has about 30% of the global oil supply, which puts considerable pressure on the global market. So pay attention to what they will say this Saturday, as they have already anticipated that they are likely to decide to raise the price of oil, and OPEC will do whatever it takes to make this happen. While we see the United States trying to counteract this effect, all this remains to be seen. But how are we going to track this on the chart? Well, regarding this downward impulse, here we have a W pattern, this could be a weak E pattern, and here could come a hypothetical Z pattern. Do we know for sure that this will be the case? Frankly, we don't, but we are tracking it. In the end, we are evaluating this accumulation, which has generated a trap, and we will see if they want to break here to start rising, and if they want to go for more expensive oil. In other words, if we see the S&P and Nasdaq falling, we will see oil rising. And you know what structures we are tracking in oil. And regarding Ethereum, remember that we come from a very aggressive Z pattern. Here we have its macro trend line, and due to the event of the approval of the Ethereum spot ETF, ETF, we previously experienced accumulation, and here we see this explosion. After the bullish impulse, smart money is tracking it with a channel. Here is that channel, therefore we can't think negatively about the ecosystem as long as this defense zone is not lost. Therefore, now in Ethereum, we remain in a bullish channel, and we will see if at a macro level its intentions are pro-halviners. If we talked about Shiba Inu fans some time ago, now we talk about halviners, those investors who give great importance to halvings. We will see if this impulse seeks an immediate replica. We will know this if they surpass the POC of this distribution. That is saying a lot, but since we are in a Z pattern, we have to be optimistic until proven otherwise. In Cardano, we find ourselves in a very macro range. Now look, it's not necessary to have a crystal ball to know if the Z patterns will continue or collapse. Trying to predict this is suicide. Instead, it is more effective to identify key points where the price might react to find some type of opportunity. As we mentioned in previous videos, this area has a high probability of reaction in Cardano. Similarly, with Cardano, the break hasn't happened yet. They might come to test the click to work this flat pattern or seek an important volume node found here. Look at this drop in Cardano and these significant sell clusters that push the price down. From here, we extrapolated our rectangle to the traditional chart. So, there is margin if the price wants to deceive and rise to evaluate this bearish continuation. What the altcoins tell us, continuing with Cardano, is why not think we are in a potential bullish accumulation. In Cardano, if we look at the daily chart, we come from a macro accumulation that broke out and now has come back to seek the origin of the breakout. Who knows if they are compressing us here? This is all a hypothesis. Remember, we are in a Z pattern and we need to stay positive until proven otherwise. In other words, with Cardano, we found a very key node, which they are now respecting. Who's to say this isn't a classic advanced defense zone before a breakout of a creek, leading to a great moment not only in the crypto ecosystem but possibly in the entire financial sector? This is our point of control. If we saw a break, we would then analyze what Bitcoin and Ethereum are doing to see if they have started to break wedges or Z trend lines, prompting us to consider the rise finished and then prioritize declines. But until that happens, we should maintain a positive bias. Similarly, with Polkadot on a macro defense zone in this daily chart, notice how the price comes and defends, and no one can break it. On this structure, we could be compressing and accumulating. On an hourly chart, we might be in an accumulation phase, and they have already drawn the supply line before the creek breakout, which could lead us to really attractive levels for its price. How are we going to control this? With the supply line. If this supply line is breached, my friend, nothing would look good for bullish ideas. But, well, we will monitor this closely with Bitcoin and Ethereum. Now, let me know in the comments what you think about the future of cryptocurrencies. Are we positive or negative? What's your opinion? Also, give this video a like, subscribe to the channel, and click on the bell so YouTube will notify you of future publications. Good luck with your trading and see you next time.